Hey traders, this is the current swing trading watch list, updating it on July 27th right now, just going through the updates and doing this video along with it. Going to look at a couple different strategies. We got earnings plays, some more earnings kicking up right now. We got some chart patterns, and then from the best day trading stocks list, we got potential TATR trades. TATR could be used with really anything that's moving well, but I update the best swing trading stocks list, which is high momentum stock names, every couple weeks. So let's look at these. We got COUR, LW, GNTX. So we'll just go through what these look like. So nothing happening quite yet. With this, we just have the big move up. And basically this could continue to move up for a little while, we don't know, but then we are waiting for a little pullback, and once the price breaks above candle highs, we are looking for a long, kind of like very similar to what happened here. So you have the gap up, this one a little bit smaller than the one we saw. This one was about close to 14% by the time the day was done. This one, by the time the day was done, up about 37%. A little increase in volume there, huge increase in volume here. But you can see we get the pullback, and then this is pretty much what we want to see, is that volatility contract. We're in the pullback, and then we start moving above candle highs. So we'd be looking to get long in here, stop losses. The big one would be below kind of recent lows, or just below the candles once the price starts making that up move. So, pretty small risk, stop loss in here, go long, and it would be the same thing. Once this starts moving up, could put a stop loss there and participate in the next up move. LW. Continuing its move up. This first day wasn't great. We did have a nice move up from here to the close. We're up about 16%. Looks like it kind of finished right around the halfway point of the daily range. That's not ideal, but since we've continued to move up, and we're seeing really strong price action, nice volume increase, I would consider this. So if we start getting that pullback again, similar to what the example I pointed out before, ideally we get that, a couple small candles on a pullback here, which gives us a nice small risk. It starts moving up, entry, stop loss below those candle lows where the price started moving up, nice small risk, and then we let it run. And I just use this indicator to let it run. It's ATR stops, it's called, and basically it just follows price. And I exit on a daily close below the line. GNTX. This one again, just starting. We had a big gap up. Now we wait for a bit of a pullback, and if we get that, then looking for a move up using a trailing stop loss. We'll come back to these. I did not run a new scan this week for chart patterns. A little under the weather this weekend, so I didn't really feel like running a chart pattern scan. And with more earnings starting to come out, and we got quite a few still on the best swing trading TATR watch list. Plus, that's going to be updated in the next few days toward the end of the week. The best swing trading stocks list gets updated near the middle of the month and near the end of the month. So in the next few days, that one's going to be updated as well, which presents more opportunities. So no shortage of opportunities. SRFM. Just to show, so basically how this works, and we enter when the price moves above and when it closes below. So this one, it provided much more profit potential at one point, but this would have still been, a nice trade. And, this is going to happen where you get the sharp reversals sometimes, and a lot of the profit gets evaporated. you know, if you find a better exit, you can definitely use them, but this is just a simple way to trade and take advantage of catching a chunk of the trend. So this one's below, so once we move back above, then there's the opportunity for another trade. OUST. So I mentioned here, wouldn't want to see much more of a pullback. If it gets too big relative to prior pullbacks, that indicates reversal or choppy price action. That goes for all swing trading stocks. That's a rule I like to use. And you can see most of these pullbacks. Now, this is just zigzag indicator, and I believe I have it set to 9%. So all this is going to do is show every time there's a 10% move from another point where there was a 10% move, it's going to show us. So there was a 13% pullback, 53% up move, 17% pullback, 113% down. Anytime there's a bigger move than 10%, it's going to draw in a line. So what this basically tells us is, you know, as we've gone through this rise, 12%, 15%, 16%. This one was a little bit bigger, 22%. This one, 22, close to that 21, 22%. So if this were to drop and hit like, you know, a 30% decline, that's a lot bigger than anything we've seen. And, you know, I'd be inclined to be a little bit worried about it, especially we start, you know, kind of taking out some swing lows or something like that, like here. You know, so it's not a problem yet. I just point it out because it's one of the things I look for. Once you have a really big decline relative to the prior moves, that very often, it doesn't mean the move necessarily has to be over, just more often than not, it leads to choppy trading or a reversal. So my odds of getting a winning trade deteriorate significantly after a bigger drop than what we've seen. If we have a nice established uptrend, if we start seeing bigger drops, I would rather stay out. So that hasn't happened yet, but just pointing it out. Try to provide a little insight in these videos as well. I'm not really I don't like just providing trade signals. You can see these pretty uniform declines. We can get rid of that for now. And we're just below and on the cusp of moving back above. We want to see that move back up. Just drop below, so this could continue to move down. Maybe we get a signal here. But while we're above, there's not really any signals unless you come up with something else or you find a chart pattern or something. But once it drops below, then we have potential signals if the price closes back above the line, which would flip this red back to green. As you saw here, downtrend, downtrend, downtrend. It goes above, you get the flip, and it flips back to green where price is running below the price. Here, very brief pullback, pops above. That's an entry signal. It's held until the price drops below there. So that would have been a nice, you know, capturing a nice profit there. PCT, QS. Stock I've been day trading lots as well. It dipped below, waiting for a move back above. MGNI. Again, nice little, not quite a contraction pattern, but we're getting that, you know, tight little range and price popping up. So if it moves above, maybe we get the break out of that. Nice continuation to the upside. But that's why we have the stop loss and the trailing stop loss there in case it doesn't, right? Unfortunately, if I knew which stocks would run, that would make trading a lot easier. We do not know which trades are going to run. Some of these are going to pop above and they're going to fizzle out. Other ones are going to go on a huge run. So this type of strategy, we end up with lots of small losses and small wins, the occasional bigger profit, and the occasionally a really big profit. And that's sort of the edge of this strategy, is that you can sometimes, you know, capture these pretty big moves. And even a trade like this, you know, we capture a nice chunk. AAP, pretty sharp drop. We throw the zigzag, hasn't really, even though this, that's drawn in the wrong spot, right? You see this does not connect to the high. So our current drop is about 20%. That's getting, or the maximum from that high, close to 20%. We've had a 16% drop, so we're getting a little bit bigger than what we've seen. If this were to really, you know, fall off and get quite a bit bigger than this, that would be a problem, and I would not want to trade this going forward, even if it did cross above the line, simply because once that bigger decline happens, things tend to get choppier. You know, here, 17, 15, 17, 12, you know, kind of declines in a similar area, and then you have a 30%. So even though this went above, I would not be interested in taking this long trade here. A, the uptrend's gone, and B, you've had a much bigger decline than what you had during the prior up move. This is an up move. This lets us know how big the drops are, 11%, 16%, and if we start getting much bigger than that, that's problematic. HSAI. Get rid of that zigzag. This one's definitely dying off a bit. Probably won't be on the next list unless something happens, simply because it's just fizzled off. Yeah, really slowing down. So I don't like just blindly trading every time the price crosses. I'm definitely considering how the price is moving. Does it seem like easy money when the price is really moving up, quick pullbacks? You know, in here you're getting quick pullbacks, moves up. So, and then when it crosses below the line, we're kind of expecting, okay, well, price is making nice moves up followed by quick pullbacks. Let's take it. As it starts to slow down, it becomes a little bit more, is this easy money, or would I rather find something new that's moving really explosively? This still moving well. We're in a little bit of a contraction pattern, popped above. I wouldn't call this a contraction, but a bit of a range. And we had, this is on the list because we popped above here, and we're still, you know, kind of near that entry point area where the crossover occurred. Flex. We'll pop below, looking for a move back up. I think the next one was EL. This one moving very nicely. We have moved below, and we are just crossing above right now, or as of the last close. You get the idea. Drops below, looking for a move back above, and yeah, there will be, you know, losses. You know, this one popped above, and now it closed back below, so you'd have a small loss on that trade if you had taken that one. Does it totally nullify the overall great movement of the stock? No, this one's moving pretty well, so I would be potentially looking to get back in. Of course, trading is always a trade-off. We have multiple stocks on the list. When we have some that trigger, I'm always looking at which one do I like the best, which one's moving the most, which one offers me the most explosive potential. You can see, I won't go through the rest of these. They're all pretty much the same. This one, again, this one just crossed on Wednesday. I'm recording this on Sunday, and we're still in that entry area, or even at the moment just below that entry area. But this one's a little choppy, but as you can see, overall, pretty nice movement to the upside. Okay, let's go back to some of these. And like I said, I didn't update them, or I didn't run a new scan, but I just updated some notes on these. You know, I get a lot of questions, people saying, I don't know, I don't understand what you saw on that chart. So we get to go through a few of them. So, what was my note? Still near 185 entry. So this is no longer an ATR type strategy. So here we have some chop. We make a lower swing low, and then we move up to a higher swing high. This higher swing high relative to this one. So this creates a rounded bottom type scenario. We have a pullback, and and then the price starts to move up. So right in this area, make that a little bit bigger to make it more prominent. So right in this area, we had an entry, right? We have the rounded bottom pattern, pullback, price starts moving up. Stop loss below here. We are right in that area again. We tried to pop up. You know, I'm less inclined to take this now than I was before, right? Because in this situation, we're kind of waiting for that explosive move. This has fizzled now. So it's not quite as ideal as it would have been, obviously, taking the first one and it runs. Because now we have a little bit more information and we're getting a little bit choppy. If there's no other patterns, maybe we trade this. We're keeping our risk pretty small. But just something to be aware of, that this first attempt to move up fizzled out. And as these stay on the list, that happens more, which makes them less attractive. If we're not getting that push up, then, you know, do we want to keep hammering it? But yeah, some of these are still on the list from you know, prior opportunities. So here again, price is dropping. Right there would be your first entry point. Because we have this little rounded bottom here. And this is our higher swing high. Price pulls back. It gets kind of into the crotch of that area. So this doesn't always, they don't always quite align with a trend line, but the low to the next low, and then we're entering on that next pullback. You know, this one's fairly close. And so that would have been the original entry. And price is doing quite well from there. We would have had already achieved a much greater than 3-to-1 reward to risk. We've been as high as, yeah, 3.5 or so, just estimated. And so, yeah, we have a nice profit there. If we look at how far did these prior ones kind of go, this was based on earnings. That was about a 40% move. This one after it popped, about a 40% move. This one after it popped, we're only at about 20. So could potentially have a little bit more in this. It's also starting to contract, which is another type of pattern. So could be setting up again based on a different type of pattern. ASM. Nope, that's the wrong one. So these are TSX. Going through these first. So this was a very little pattern. But you can see price drops, doesn't make much progress, and we make a slightly higher swing high relative to these, and then price moves up. So that original entry was, you know, right around there. Stop loss below there, hasn't been triggered yet. But this has fizzled a little bit, and it's coming back to test this area. If this starts to pop up again, could be interesting. And also, you know, gold's a bit rangy at the moment, but the miners have been doing pretty well. So sector-wise, if that starts to improve as well, this one still could be okay. This one more just interested in that it's like so tight. And yeah, we'll just kind of wait for a pop out of here. The problem at the moment is, even if, so we have a consolidation here, and, you know, price could pop out by a cent or two, and we can see that's happened a few times. You get these little consolidations. So I'm not as interested, just, you know, if it moves a cent or two out of a consolidation. I'd prefer to maybe be a little bit late and see a nice, you know, and enter near the close maybe of a day when we get a nice pop out of all this crap in here. STCU. This one already gone. I like this one, just it tightened up so much right here. So this is kind of what I was talking about. Like once you get a daily close, where you're starting to move up and out. So that would have been right around here. That one or that one even, you know, we're starting to move up out of this. It's starting to act well. We've had a huge run in this. It's a great uptrend. Now, if we're not in, I think the next opportunity would be maybe get that little pullback to that area. Right, hovered around here for a long time, finally broke out. We get a little pullback and then maybe another move up. Yeah, I wouldn't say I'm in love with anything in there. Again, it's always a trade-off, right? We have lots of different opportunities to look at, and if we ran a new scan, there might be some that, you know, are fresher, still have that potential for that first move. Once they've kind of lollygagged around, it's like, not quite as attractive to me, because I find the really great trades do tend to go fairly quickly. Oklo. This is a nice rounded bottom here. So didn't get much of a pullback there, but we got a little bit bigger one there. So I like that. So this is gone now, but good for demonstration purposes. And, you know, whether you're just going for a 3-to-1, which is kind of the simplest, or you're measuring out moves and looking at how far price tends to run, could have a bigger target on this. Moving fairly nicely. QBTS. Same thing. So here was the first higher swing high. Moves above this little area and even this area. Moves down. So this was original entry. As the price starts moving above candle highs right there. Again, we'll just put a 3-to-1 on it. Get the idea, about 3-to-1. Second entry would have been right around there, right? You know, next pullback, we're still kind of, you know, hovering near those highs. So that would have been second entry, and we're still kind of near that. So it's not as good as the original. We're getting further into a pattern, but usually, you know, something similar to that. Like this wasn't quite a rounded bottom pattern, but you know, even after the rounded bottom has occurred and the price has already popped up, you get this, you know, next wave. So this is trying to capture the next wave as a later entry, because I don't know if it may come back to that original entry point, it may not. Hertz nearing original entry point of 718 or second chance 722. So what are those? So here was one, but then we just flush out to right back to the prior swing low. That nullifies a pattern, because the rounded bottom has to make a higher swing high and be at a higher swing low when we take that trade. Even if in real time you thought, oh, the price popped above, this candle before it, the pullback, there were no entry signals at this point, and it had already touched that swing low. So we would not want to take that one. So then we basically need to wait for a new one. We get a new one there. So we get the pullback. Original entry is right there as the price starts making higher candle highs. So we have this candle, price moves above it. So once that happens, that's our original entry point right there. We're moving back to that. The second one would have been, if we missed that, we saw this little pop up, this nice little pullback, these small candles, we could have gone long there as well when the price made a higher candle high there. So that would have been the 722 entry point, just above that little green candle. And again, it hasn't really moved. So, you know, as the choppier it kind of gets, the less I like it. So these are basically the ones left on the list, are the ones that haven't really moved a lot. This one was potential for it to contract. It hasn't really done a whole lot. It's still kind of rangy. If it starts popping up, that could indicate another entry, potential move to the top of the range. But ideally, then it breaks above. If it moves up here and then stalls out again, I'd get out because it might just keep doing this indefinitely. Well, not indefinitely, but for a while. So if we're entering here, as the price starts to make higher candle highs, so it moves up above this candle or this candle, then yeah, it sets up a short-term trade possibility with a bigger potential if we get the pop out. ARMN. This one already underway, hits the 3-to-1. Option to hold. So yeah, this is just one that's already underway. Very nice contraction. Pretty textbook here. First drop, move up. Second drop. The drops move into the crotch area of prior waves. This drop, the price moved into the crotch area but didn't exceed it much. The crotch is simply where the price area reversed. Here is the crotch area on the downside. Price moves into it. Then we get a little bit more of a wiggle. We finally get our consolidation and a breakout. So this hit 3-to-1 a couple days ago. And if we're measuring out moves, we could be looking for, maybe a little bit more profit, but just an example of one that's ATYR. So this one was rounding, and original entry would have been there. It got up to about 2-to-1 and then would have got stopped out. We've had these big whipsaw moves. So, if you don't mind that, I'd maybe play this one if it moves above this candle. Stop loss is there. 3-to-1 is pretty much just above those highs. But I would throw an aggressive trailing stop loss on that. What that means is every candle you move the stop loss up. So if we had used an aggressive trailing stop loss on this one, entry point is this candle, or when the price moves above this candle here. So it would have happened on this day. The high of this candle was 557, so our entry point would have been 558 on this day. And then it would have got moved up below this low, below this low, below this low, as the days complete, and we would have got stopped out here. So we would end up with a tiny profit as opposed to a full loss. So that's an aggressive trailing stop loss. I do not recommend it under all conditions. I recommend it when something isn't quite right, or things are whipsawing, so there's the potential for a nice move up, but if it reverses, it's going to happen quickly, like it's been happening here. So also really high momentum things, it can work well, but even a little bit of a blip will, if you had gone long somewhere in here, anytime a candle low gets taken out, you're going to get taken out as well. So use it selectively, but in this type of situation where you have whipsaws, that's more the approach I would take. So that's the swing trading watch list. This one, probably COUR, the main one I'd be watching for the earnings plays at the moment. More earnings plays are going to be coming. These ones I'm not as interested in at the moment, which is why I didn't scan. The best swing trading's watch list, there are still some that are moving quite well and could form setups. And the best swing trading stocks list will be updated in a few days, which will set up more potential opportunities. Hope that helps you out, just going through, seeing a bit of the process, how all this works. And if you're interested in seeing the whole process from looking at market conditions to scanning to sorting through which trades, what things to avoid, we went over a couple of them in this video. You can check out the complete method stock swing trading course under There it is, under trading courses, stock swing trading course. All right, have a great trading week out there.